All righty. All right, today, March 13th, Friday the 13th, 2026. I don't have that effect, but I don't really care. Story continues to be crude. It does look like we finally got some rollover. I don't know if it's reflected here in TradingView because this is the continuous. Let me go over to the other platform because I know here and on most other platforms they have rolled over into the May, so they're actually still trading the April over there. But for the most part, if you're trading, I would likely you're going to be using the May on that light, sweet crude that we use here in the United States. So that is the story. I mean, it doesn't really matter. I mean, chart-wise, the numbers are basically the same if you look at the charts, so it's not a big deal. But the story is still oil. And so goes oil. I think so goes equities. And as you can see, with oil being down overnight and then especially getting kind of whipped up yesterday, you can see most of the indexes are up this morning, gapping up. The Russell, the NASDAQ, the ES, and the YM. So, again, I'm going to continue with my thesis. I'm not a flip-flopper. If I'm going to be wrong, I'm going to be wrong. But I still think oil short is, again, short term. I'm looking at oil short, and as I mentioned, anything later than April on the option chains, I think you'll be in good shape. It's going to press your position quite a bit, I think, over the next couple of weeks, but I do think we are gradually going to start seeing more and more stability over there, and I think that's going to filter through. I don't know if it's going to be over there, but I think as you start to see more and more stability, because it does appear that, things are going to start moving, and I think once things start moving over there, and I think there's more pressure. It's crazy. I mean, I think there's more pressure on Iran to start cooperating because basically by the more time that they kind of resist over there, they're really hurting themselves, number one, and they're also hurting everyone else who buys their oil. And I think they're going to quickly find that. I think they're going to quickly find out that these places are going to find alternate means to get their oil, and when they do, and then it begins flowing again, there's not going to be any room for them to kind of move. So it's kind of a weird situation, but I guess some things have to be done the hard way, I guess. I don't know. But anyway, that's kind of what's going on with that. I don't really have I'm not really trading oil futures at all. Way too volatile for me. If you want to do a micro, that's probably fine. If you want to, feel like you have to get involved. For me, I'm just staying away from it just because it's, it doesn't suit my trading style. The way it's trading right now, it doesn't suit my trading style. I think you need to have much too wide a stops in here to really catch any moves. You can see when you look, this is a 1 hour chart. I'm going to blow this up here. When you see wiki, and I call it wickiness, when you see a lot of wickiness in a 1 hour time frame, that just tells me that there's just way too much volatility in there, and it keeps me out. It absolutely keeps me out. I don't have any interest in, and you could say the same about the indexes. So that's pretty much it on crude oil. Also, the other thing I want to mention is I did add a little bit more to my bonds trade. Also, I think bonds are kind of, again, trying to be contrarian here a little bit and kind of go against a lot of the momentum. I think bonds are a good buy here as well. And I think if you're not really putting on, and look, it could not work out. It's an amazing thing in the business here, in the trading business. There is stuff that doesn't work. And it's amazing. And, I know there's way too many people who try and put themselves in a position. There's way too many people who are political about it, wherein they put themselves in a situation, or they try to make a statement where, oh, I never really said that. It's like, I don't care. So anyway, I think bonds are a good play down here. I do not think it's going to be an easy trade, and I think it's going to be a lot like oil. But one way I am playing it, as I mentioned, is in the TLT. And we'll put that up there. Very liquid ETF. I have a pretty nice position. This active trader, I will tell you this. If I'm going to bash up on Tasty Trade here. That active trader 2 is the biggest, absolutely the biggest piece of garbage I have ever used in my entire life. It is awful. Awful. God effing awful. Anyone's ever used this, oh my God. And I've tried. I tried yesterday to use it a little bit. It didn't even effing work. So here's where I am. And I mentioned what I was doing in the TLT. I'm going to, quite candidly, once I get down to the 85 strike here, I'm likely going to be done building this position, and it's gonna either go up at that point, or I'm just gonna die on the sword here with this. But that's what I'm doing, and I'm going out to January. You notice I'm going out way far. All right. And I am doing it in options, and I'm doing $5 wides, and I'm just laddering, as you notice, I'm just laddering them down and building my position. And the nice thing about the TLT is it does have dollar wides. So if you don't want to do $5 wides, do something else. I will just use, and it doesn't matter the expiry. It has dollar wides everywhere. It is probably the most liquid ETF out there. If you want to keep it small and you're not real, a 9091 is 33 cents, $33. So, this utility, this ETF utility, but this ETF I call a utility because it's basically a tool for you to take advantage of treasuries. Anyway, this ETF, you could literally get long bonds for $33. And, again, a really, really good vehicle for any kind of account, no matter how big it is. And then, depending on what your risk tolerance is and how much you want to lose, right? How much you're willing to lose, you can control that. So just widen it, like a 90, 92, 93. So, there's a lot of different things you can do in here based on your risk tolerance. All right. And so, and that's kind of it on bonds. I really don't want to say much of anything else because that's kind of what I'm doing there with it. I'm not really playing short ball with it because I think in the short term, it's going to be very, very volatile. And as you can see, based on the 1 hour chart, we are absolutely, no question about it, down at the bottom of a range. And I can't say that my positions in bonds right now are profitable. In fact, I think I'm down a couple of $100, right? Let's just put that up there. Because I love being transparent about this crap. Here you go, $287 to be exact. Yeah. With the biggest, and this kind of shows you one thing for sure. The worst position in here is the one where I didn't do a spread. So although spreads limit your upside, they absolutely 100% limit your downside as well. So, let that be a lesson to you from someone like me learning the hard way. But anyway, these are so far out, right? That's why I'm giving them time to kind of cycle out here. All right? And it'll be, hopefully it's not the second coming of what I went through, I think 2 years ago. 2 years ago, I think I mentioned that. I went through the same thing with bonds. I actually loaded up over time, and they went nowhere. And I ended up getting clipped for a couple $1,000. But hey, that is what the hell happens, right? And speaking of losers, here you go. Here they all are. And look at them. There's some nice ones here, like Microsoft. I was buying the dip on that, and that really worked real good. And a lot of these, and the reason is I'm holding off. And same thing with USO, right? I'm down 160 in that. And again, the biggest loss is the one I decided to just buy puts. Amazing, right? But you give it a shot, right? It's what you got to do, folks. That's kind of part of the game. And although I tell people, they're like, wow, you got a lot of losses lined up here. Yeah, but a lot of this stuff, if you look at the expiries, a lot of these are out a while. And then what's not reflected on here is that with a lot of these trades, many of which are like out of the monies type of things on the losers. And that's why I've continued to hold them. Now, I got a couple in the monies here, but they're not actually down that bad. But, with that being said, these are so far out that's why I'm kind of holding on to them. But what's, again, not reflected in here is although I have a number of positions that are working, what's not reflected is the ones I've taken off. And because usually what I normally do with profit, and it's one thing that it's not, I'm like religiously do it, but what I do is like when some of these positions get anywhere between 30 and 40% up, it's about 30%, and then I'll go check the chart and see, I take them off. Unless it's something that is trending. And again, like this one's trending up. I've had this one for a long time. You can see I've had this one for 382 days. And it's still up, but I still have 97 days till it expires. Again, so, that's not reflected in here. So honestly, this looks worse than what it is, but, it is what it is. And I keep them there and I show them to people because, look, I got losses. I got no problem with showing them. because not everything works out, and not everybody has. I got a 90% win rate. I got an 80% win rate. Yeah, sure you do. Yeah, sure you do. If you do, then you're full of shit. You know, because that's reality. You know, nobody has an 80%. If you had an 80% win rate, you'd be working for some hedge fund would scoop you up in a second. Yeah. So anyway, that's that with the bonds, and then let's look at the equities real quick. We'll look at the ES. I have been trading a little of the NASDAQ, folks. Yeah, I have. I can't say it's very. I really can't say I like it. Honestly, I don't like it, folks. And I don't know what it is about it. It doesn't feel. It doesn't feel real. It really doesn't. It's too. The tape is too whippy. And I feel almost like I feel like it's fake, and I don't know, maybe it's just me, and I've traded it before. I think I've told everyone I've traded it before, and I didn't like it, and I don't like it either now. And it trades like it's thin. It trades, it trades a lot like the Russell, but even the Russell does not feel the way the NASDAQ does. And again, that's just, kind of my opinion of it. And I know there's so many people that trade it, and I'm not dissing you. That's great. If you can, if you've developed a style and you're trading it, and I know and watch other folks too that trade it, and, I envy them because that the way they were able to trade it, because I don't know, it's too much for me. But, maybe I'll learn if I keep trying. I've been known to force myself to do things sometimes, and, to my own begrudgingly self, learn how to do it. But anyway, pivots look really good today, just based on the price range that we've had yesterday. And the reason I'm saying that is that we have a number of things that appear to be lining up pretty nicely relative to the price action. One being this R2 at 67.66. We have yesterday's high, and we have an R2. So that's going to be a very, very important area today. So I would definitely mark that one down and keep an eye on that, because to me, that one is going to be a really, really important one today. That if and when we get back up there, that will be in my opinion, could be and has the potential to be a trade of the day. And again, you have a lot of things going on there. Previous high, a pivot point, and then even, a stretch, but still viable is you have that swing high here from earlier in the day yesterday, or was it in the afternoon around 2 o'clock, a number of touches up there and close to there. So to me, that's a good one. That's a good one. Overnight, we touched S2. I wish I was awake, but usually I never am. But we did touch S2, sliced through it a little bit, and rallied pretty nicely, and have been rallying ever since. I'm going to stay away from the pivot today. Does not really interest me. Again, there's not a lot down in there. You do have this swing high from yesterday. That's kind of sliced through it. It has potential. I'm going to mark it on here. But I am not going to. Where is the message? Okay, there it is. So they changed it. I'm I'm going to mark this on here as not critical, and I'm going to put this on here because it's not really a critical spot where I'm going to be really interested. Again, I'm going to keep an eye on it, and it really depend on the tape action, and we're getting close to that. It's really going to depend on the tape action here of whether or not I take something. All right, and I mean, it could be an interesting spot too, because now looking back, it does, if we do get up near there and get through there, we will have filled the gap again. I mean, we filled it. Did we fill it? No, we did not fill it, I don't think. No, we did not fill it. Well, yeah, we did fill it, so I don't even know what I'm talking about. Anyway, I'm sorry. It's tough getting old. But anyway, scratch that. I wish I could go back and erase. Anyway, there you go. Just, again, not critical, but something definitely worth, taking under consideration. The other spot, too, and again, these are things that you got to be aware of. Huge volume hole here, right? Low volume node. And it happens to be at around pretty much right where R1 is. So I'm actually going to mark this one. But again, this one's not going to be, it really depends on how we get here. If we get up here with not really a lot of momentum and it's kind of slow and sloggy, that will set up to be a really nice fade. All right, and then here I'm actually going to do this. I'm going to do low volume node, and then I'm going to just say fade. And what the difference is between a fade and just a regular trade is that a fade is that we're only going to be looking for, basically you're looking for a scalp. We're looking for 15 to 20 ticks on these because we're looking for that natural price action where it gets up to one of these levels and it fades back. It rides up to it. It fades back, but then it likely, will do like a gap and go or whatever cliche you want to fucking talk about. It's a fair value gap. Whatever it is you want to call it, but that's what it is. That's what I'm calling it. So as far as on the downside, the only spot that I'm actually going to be interested down here is yesterday's lows, which is 66.71. I would take a shot down there again. 66.71 is right around R1 or S2, S1. Ugh, S1. I need to get my eyes checked. S1, and so I'll be looking for something down there for a bounce. All right, if we get back down in here, again, it's going to be one of those things where if I'm talking about getting into trades down at S2 and S3 today, I think oil has gone back up near $100, and we're under heavy selling pressure, where there's no signs that we're going to have any buyers come in. So anyway, that's why I'm kind of looking past this because, I don't know if I really want to catch a knife down there. I did a couple of knife catches yesterday or tried, and, lo and behold, I think I did 6 trades yesterday, mostly I did 2 trades in the NASDAQ, 1 loser, 1 winner. I think I was net down. I think I was net $10. I think I lost $10, and I did like 4 or 5 trades. It was like 4 or 5 trades in the Russell, and I think I ended the day up 32 cents. And so that was what kind of day it was. I was trading micros, just to be clear. I was trading micros. I'm doing all micros right now because I just don't feel, I just don't feel comfortable doing the full-blown contracts with this volatility in these markets. I find it a lot less stressful just to do a micro and do a couple contracts in the micros than mess around with doing the big boy. So anyway, that is kind of the story in the ES. And the NASDAQ's going to look very similar. I mean, it's kind of crazy. I mean, do you see that? I actually changed the chart, and they are almost exactly the same. I mean, look at this. This is the ES. That's the ES, and this is the NASDAQ. I mean, nuts, right? It is literally almost exactly the same. Same touch overnight. I mean, this had 2 touches, but same touch overnight at S2, right? Yesterday's lows, pivot, right? R2, yesterday's highs. I mean, I can't even, all I have to do is just say, hey, go look back on what I did on the ES and do the same thing on the NASDAQ. And it's that crazy. I mean, that they are trading literally in parity right now, and it is absolutely stunning. Okay, so rather than go through all that again, just whatever you saw on the ES, do it on the NASDAQ because it's the same exact thing, right down to the volume hole in here. I mean, you can't. It's kind of nuts. So anyway, there's the NASDAQ. Now, Russell. Russell, a little different, right? Close, but no cigar. A lot more pressure to the downside on the Russell. But then again, a little bit more pressure to the downside and a lot of touches to the downside, but a lot cleaner bounces, in my opinion. Where the Russell yesterday was extremely range bound. Where the ES, I mean, even though the Russell was down, I think percentage-wise the most, after it lost value, it seemed to stay in its price range. Similar situation here, though, in the Russell. We have yesterday's highs at 25.39.50. I like that for a short today. R2 25.41 25.41. Wapner 4 o'clock 25.41. So we're going to be looking at that. Volume hole down here is a little bit lower. It's a little less than R1. But more than likely, I will take this R1 on the Russell for one reason is that we had yesterday, yesterday was 2 days ago, could not get through there. So I'm going to look at that as short-term resistance. We have a high volume node just above there, 25.2870. And then again, this low volume node at 25.17.4, which also is getting close here. So I like this area. Now, the thing about the Russell, and the one thing that, you need to understand about the Russell is that it is a little more whippy, and not whippy, but it will kind of drift a lot more. You get a lot more what I call drift in your prices on the Russell, and it's because it's a little thin. Let's face it, it is a thinner index between from the other two, but I like trading it. I like it. I've grown to like it. I've been trading it now pretty extensively for about 3.5 or 4 months. So, which is a change because I was an ES guy. So, there you have it. That's kind of it on the Russell. We get up to R3. I'm not even going to play around. I'm just going to let the sucker go. Same thing down here. If we're actually talking about support points, there's probably going to be other problems. Again, oil's probably going to be like, back near $100, and so I'm not looking down. So there's your indexes for today, and some spots that I think are going to be good for setups. And then let's move on over to gold. Gold, I think, has been untradeable. I have not found it very tradable. It's and it's just not now. Let's just get this cleaned up. It's not just now. It's been for a while. And I did a lot of talk yesterday about the gold. And that if you zoom out, we're still in this, what I'm going to consider this chop unknown space here, where, really depending on your sentiment is going to tell you where you think. Look, if you're bearish, you're going to think it's going down. And if you're bullish, you're going to think it's going up. I think when you look at the chart and you try and be objective about it, it's directionless. I mean, you can't get more directionless than a chart that looks like this, in my opinion. Right now. And so with that being said, I've actually stayed away because, they have definitely been buying the dips. There's definitely a lot of dip buying going on in gold, but it appears to get quickly quelled. And so, it's kind of kept me away from this asset overall. All right. And that's really all I got to say about gold. And to me, the only way to really play gold is similar to how I'm doing it with oil, is I'm going out to January and I'm buying calls. And you can see I'm like not even messing around. I'm going out. Like I'm swinging here. And there's no question about it. And I've been scaling in. And when there are big dips, I have actually been going and buying down the ladder, similar to how I'm doing the bonds, similar to how I'm doing the USO. And I will probably finish my position off here when I get down near this 500 strike, because I do think gold, and specifically the GLD, I think it is going to be at or near $600 by the end of the year. I mean, that's just kind of how I'm playing it. And so what I'm doing is I'm going out to January and playing it that way. The nice thing about the GLD, though, is if you don't go out to January, if you go out, I think the June, I want to say the June or the May. Let's look at May. No, they don't. I thought they had dollar wides, but I guess not. Thought they had dollar wides, but they don't. They're $5 wides. But anyway, so even with that being said, you're looking at something that you can get a lot of cheap trades in here, even at $5 wide. For example, if you come in here on a dip, and let's say you did something even near the money, like a 470, 475, you're a 50-50 shot. But you're still getting close to like 1 to 2 or 1 to 3. Was it 2 to 3, 2 to 3 odds in here, and 2 to 3 payoff, I should say, right? So I mean, to me, you can't beat that. Actually, no, it's a little better than that. It's a little more than a third. It's a little more than a third. Right? So in other words, you're risking 200 to make 300. And so, yeah, so I mean, again, cheap trade, a couple $100. You're not like betting the farm, and you're playing long ball. And I think you got a good risk reward. So that is gold. And that is pretty much it on, on Futes. And then let's kind of move over into stocks. I talked about NBIS, and I didn't do anything yesterday. I likely will do something today. It is actually up a little bit. And I talked about, and let me just clean this up, just to get that off. So by the way, what this is here, this is the, because people were asking what this is. This is the session volume profile. And what I use this for, and more so with stocks than with anything else, is I use the point of control, but it's the daily point of control. So if you notice here, I have all sessions. And the only thing that I have highlighted, because I don't really, look, when I'm looking at stocks, I usually am looking at a little bit more longer term per se. And then I'm really more interested on where the points of control are than the value area and all that other stuff. Because usually the value area and all this other stuff really has to do with if you're day trading. And I'm not really day trading stocks. So I'm just looking for points of interest and points of volume, and seeing if they correspond with high volume nodes, which could be potential areas of support, right? And so that's basically all this is doing. And so when I'm looking at something like NBIS, I'm looking for a trade, and I mentioned I don't think this is really one that is worth getting long or short. I think it's worth selling a little volatility in here and like doing either like a strangle or a wide iron condor, and take advantage of this thing kind of being right in the middle of a range. And I do like this area here. It's about 80 to about 140, and I think I even went up to like 150. And we'll just pull this down. It was like 150, I'm pretty sure. So I'm looking at this area. Let me just change that. So I'm looking at this area, and don't disregard the arrow, because I could really care less whether it goes up or down. But what I'm looking at is I'm looking at this area, and I'm looking to sell outside of this space. All right, well above the highs at about $80 to the downside, feeling that that's going to be about support, right? It's a little higher than what I would call support. Support's probably down near 73, but I'd be willing to take that risk and push this up a little bit. So anyway, let's look at NBIS, and I'm likely going to do this trade today. And so what I'm going to do is I'm going to go out and I'm going to go to May, because there's not enough time, in my opinion, in April. I mean, we could do this. Let's do it in April first, though, because there is 35 days. I just don't think you're going to get enough juice in April. I don't know. You might actually 55. So yeah, you might actually. So let's do April. It's at 80.75. And then we're going to go up to the 140. 150. And yeah, I really like this one. So let's put this on the curve. What the frick happened to this? What happened to this? What is the story with this? Why is this doing this? Why is this weird like that? There we go. There you go. So I'm going to try and do this one for like 240. You got a 70% pop. You're going to use $760 worth of buying power. You are absolutely almost delta completely neutral. You got about a 6 on the theta, which isn't bad for an iron condor. If I did a strangle, I just don't want to. I'm not going to do a strangle because I just don't like the buying power hit. But if you did a strangle, likely the theta is going to be up in the 20s or 30s. So, and I look at this, and then you have this entire price. So basically, all the way to 143, all the way down to about 80 or 70. We'll call it $76, $77. All right, and so and now you're playing this range, and then you're looking for a number of things. You're looking for this thing to basically chop in here and do absolutely nothing, even go up. It's got some room to even go up. Which in that case, if it goes up, you can always start to roll these puts up, and if it goes down, you can begin to roll some of these calls down pre-expiry. And more importantly, you're going to be looking for this to collapse. And I think this is a much cleaner trade, in my opinion, than getting directional. Now, that is kind of the trade I'm going to do. That's the one I like. And I think if you are going to get directional on this, sell the puts. And then likely, if you're just going to sell the puts, move this up to either an 85, 75 or a 90, 80. And the reason I say that is that you're going to give yourself a little bit more juice. You're going to bring in almost $200. You're not really going to reduce your probability of profit. But more importantly, you are going to kind of bring this thing kind of closer to where, this is one standard deviation down here. And to me, you'll just give this, you're just trying to capture a little bit more premium by moving this up to the 90. And you got about a $20 cushion for this thing. If it does decide to kind of shit itself, you got a $20 cushion. So that's what I would avoid selling calls in there, because if it does, even though you're in the iron condor, it's really not that big of a deal because you got the puts to kind of neutralize it. But I would avoid just selling calls outright on this, just because this thing does have the potential to be one of those stocks that just kind of rips your face off, and it just has that anyway. So there's my NBIS trade, and that's really the only stock that I'm looking at right now, because quite honestly, most of the stocks in general, and the ones that I've been kind of following the most, are in this space. Whether it's energy, whether it's data center focused, or whether it's solutions based software, AI, a lot of them have just been kind of a crap right now. And they seem to have, for the most part, stagnated. Because let's face it, there's a lot of uncertainty. And the only other one that I like in this whole space right now, and I have been accumulating it, is Supermicro. And so other than that, play the news clips on all these stocks, right? There's 100 assholes out there who are going to tell you that, IRA and it's got, and then some other shithead is going to say, oh, well, no, Planet Land has, it's going to, it's like, whatever, you know what I mean? To me, it's like, news is news is news is news. When you're buying stocks and you're trading stocks, right? There's two things that move it, and that's volume and it's expectations. And all the other shit with the news and all this other bullshit, to me, that's just for the feeder fish. The news and all the press releases and all that other bullshit is for the feeder fish. You really need to just go and look underneath the covers on all these companies and really look, especially in this space right now, because these are not your Microsofts, these are not your Apples, these are not like these seasoned companies that have long histories of, revenue growth and contraction and all this other stuff. You need to go and look at the financials at these stocks and really be aware of like where their money is. Because a lot of these are like fluff. That's what I found. A lot of them are really big fluff. And the one that I found, and the reason I found Supermicro interesting, was one thing that stood out on all their financial statements to me, was their enormous amount of cash. And if I can remember correctly, and I'll look it up again, but I don't know, I can't remember exactly, but it was in the billions. I want to say it was like 6 or 8 billion in cash they were sitting on. And I was like, I saw that number and I was like, wow, that's a company that's kind of like struggling right now, but they have, they've setting themselves up to do something, big. Because when you're sitting on that much cash, especially in an industry where you're a cash burn generally, and to be sitting on that much cash is really interesting to me. So anyway, I just saw that, and then especially seeing that they came out with their last earnings release was actually really good. So anyway, there you have it. So that's really it, and I'm not going to go over all the other stuff. I mean, because like, what are you going to say? Look, the SanDisks, all these things that have just gone nuts. AVGO, I've been building a position in that one, similar to how I'm building the position in the bonds and thing. I'm using options with this, and I'm scaling out. I'm going out to January again. Everything is in January. I mean, so if, next January is going to be an interesting month for me, because either I'm going to still be in these positions and they're going to be kicking my ass, or I'm going to be in good shape. But that's kind of how I'm playing these. Because, I'm not going to get involved with the short term with them, because, look, they're all under pressure. And then I will say, as a sector, I think this software sector as a whole, I think it's in trouble. And I think what you're going to start to see, and maybe not until the end of this year, but I think you're going to start to see a lot of companies a lot of these software companies are going to merge. I don't know if they're really going to get bought, because a lot of them are kind of big and kind of massive to where I think the buyouts would be too much. But I honestly can really see a lot of these software companies, and more of the mid to higher tier, not the total high tier, but the mid to high tier, going under a lot of consolidation, and I could see a lot of them start to merge, because the growth potential in these markets is dead. It is completely dead. And it's not just AI. Everyone's saying, it's called AI. No, it's software has become a commodity. It's commoditized to the point where they've reduced it to basically a monthly subscription. It's like subscribing to Netflix now. And with them doing that, there's so many out there. I mean, it's not just the big players, and there's so many smaller players in the space that are providing the same value. And, and maybe they don't have the support structures and everything else, but it's the same value for what people were paying for, like the Salesforces and the Workdays. And there's all these smaller outfits that are handling it just as good at a fraction of the price. And these larger companies can't compete because they have this massive, massive infrastructure people and resources and, and all this, and they can't compete. And that's what's killing the software business. I mean, they kind of, and they did it to themselves. Let's face it, they did it to themselves. I don't feel sorry for them. But that is what's going on in software. And I honestly don't think, I wouldn't even be surprised to see something. I'm looking for the ETF. What the hell is it? It's IGV, I think it is. Yeah, this software, this is the one that I'm watching, is this IGV. I'm short the IGV. I think we're going to have another retest down to $70 on this one. But, I mean, look at the fall from grace this has had. I mean, you had this run up, absolute collapse. And, and if you look back, these things have not done a damn ass freaking thing for years. And, I attribute it back, and I want to go and look. When did CRM go into the Dow? And, that to me marks the end of software supremacy. When they put CRM in the Dow, it seemed to have just marked the end of software supremacy. And I think you could probably even equate that on the chart and say, look, CRM went into the Dow and then it's been nothing but downhill. Because since that's been put in the Dow, CRM's in a piece of shit. I'm not sure. I don't see this continuing. Again, the glory days of software are over. I could be wrong, but I think what's happened is the smaller players have come into this business and done it better, cheaper, and more efficiently. And it's going to be nothing but catch up. And I wouldn't even be surprised to see the likes of like a CRM and somebody like Workday merge. And whether they would call it a merger or a buyout, I have no idea. And then whose name they would keep. Likely, I would see it get merged, and then they would just keep them separate for a number of years, and then after, whatever, five years or so, kind of see whose name has more marketability and then go that route. But I really wouldn't be surprised to see something like that. And so anyway, that's kind of my whole take on things. And then what am I going to tell you? Buy Microsoft. Buy Google. Here's 5 stocks that I'm buying this month. Who gives a shit? So you and everybody else, right? Everybody's buying. Look, I'm buying Microsoft. Everybody's buying Amazon because it's down, right? Everybody's buying Google. And not just me. It's not just me buying Amazon or Google. Everybody is. Because look, if you're in an 401k plan and you have growth and you have a growth portfolio, well, guess what the fuck that growth portfolio buys, right? Everybody's buying them. They're always buying them. Because by design, it's all been set up to buy them. Because every new ETF and every new mutual fund and every new investment product, somewhere along the line, it's got something in one of those. Guaranteed there's something, whether it's their bonds, whether it's their options, whether it's something. They're buying something of one of those, whatever they call it, the Mag 7 or Mag 8, whatever it is. It's kind of funny. So anyway, that's it. That's all I got today. I think there is news at the bottom of the hour. I don't really give a shit about it. Because news has been news and news and news, and that's it. And it's been, most of the news, other than anything to do with oil, has been pretty muted. So, yeah, we got GDP, durable goods, core PCI, it's all bullshit. You're going to get the blip, and then everything will be back to normal. So that's it. Have a good weekend, and